All right, so for the last year, it feels like all we've heard is speculation, right? What if this happens? What if that happens? Well, guess what? The what ifs are officially over. The books for 2025 are closed, and we have the actual, hard numbers for Tom's River. So let's cut through the noise and see what really happened. Okay, so this is really the big question, isn't it? After a whole year of headlines and predictions, what actually happened to your home's value? I mean, for most of us, it's our biggest asset. So let's dive in and break down the real results right now.
All right, let's just get right to it. The big number. The median sale price for a home in Tom's River in 2025 landed at $545,000. Now, you want to keep that number in your head because it's kind of the anchor for everything else we're about to get into.
And here's the number that really tells the story. A positive 4.8% increase over 2024. Now, I know what you're thinking. It's not the crazy double-digit jumps we saw a few years ago, right? But make no mistake, 4.8% growth is still really strong. It's way above the historical average. It just goes to show you how much demand there still is to live right here.
So what does that 4.8% really mean? It means 2025 wasn't a year of boom or bust. The real story here is one of resilience. The market kind of grew up. It moved past all that crazy volatility and settled into what we're calling a fair value era, a much more stable, predictable phase.
And this quote right here, it just nails it. The whole bidding war frenzy, that's pretty much over. It's been replaced by this fair value mindset. Think about it. With interest rates a bit higher, every single dollar counts. So buyers in 2025 got a lot more picky. They were absolutely willing to pay top dollar, but only for a house that was actually worth it. Good location, well-maintained. They weren't just throwing money at anything anymore.
So you can actually see how this whole fair value thing played out month by month. At the start of the year, in Q1, there was almost nothing for sale, right? That super low inventory put a solid floor under prices. They weren't going down. Then spring comes along, and you see these more, let's call them discerning buyers show up. And here's the really interesting part that shows how healthy the market was. Even when more houses came on the market in the summer and fall, there were plenty of steady buyers ready to snap them up. It created this plateau of strength, just solid, steady demand.
Okay, so that 4.8% average is a great starting point, but let's be honest, it doesn't tell the whole story, not even close, because the Tom's River market isn't one single thing. It's really just a bunch of tiny, little micro markets. And believe me, what happened in your neighborhood, heck, on your street, is probably a totally different story.
And this chart right here is the perfect proof. Just look at the difference. If you owned a waterfront home in, say, Silverton or Snug Harbor, where there's basically nothing for sale ever, you saw a jump of over 6%. But then you look at the adult communities, and they had a much more modest, stable growth around 3.5%. See what I mean? That overall average can really hide what's going on.
And we can get even more specific. Check this out. In North Dover, in the luxury market, the big surprise wasn't the price, it was how fast things were selling. An average of 24 days on the market in the fall. That's incredible. Then you've got Bayville, which was like the market's value engine, just chugging along with a steady 4.1% gain. And over in Manchester, the big story was all about right-sizing. If you had a turnkey, updated home, buyers were lining up, willing to pay for that convenience.
All right, so that's the what. We know what happened. So now, let's talk about the so what. What does all this data teach us? What were the actual winning strategies for buyers and sellers last year?
The data is just crystal clear on this. For sellers, the big winners were the ones who priced their homes based on data, right from the start. If you tried to overprice your home, you paid for it with price reductions later. And for buyers, it was all about being prepared. The ones who got the best deals had their financing totally locked down and were ready to jump on those coming soon listings before anyone else even saw them. Bottom line, 2025 was a year for strategy, not emotion.
Now, for any investors out there, 2025 was a really interesting year. And the big takeaway from the data is this. The rental market was, without a doubt, the backbone of Ocean County real estate. Demand just kept going up. So the smart money wasn't in the flip play anymore. No, it was all about the yield play, focusing on that consistent rental income. That's where the real returns were.
Okay, so let's bring this all back to you. We've looked at a lot of data, but this isn't just an academic exercise, right? This is about connecting all these numbers to your personal equity, to the actual tangible wealth you've built up in your own home.
And that brings us to this really important idea, realized equity. That 4.8% we talked about, It's not just some abstract number. It's a real, measurable increase in what your home is worth. And think about it. If you've owned your home for 5 years or more, that gain probably pushed your home's value to an all-time high. That's not just a number, that's a huge change in your financial options.
And honestly, this is exactly why we're going through all this. You know those online websites that give you a home value estimate in 2 seconds? They just can't do this. They have no way of understanding these little micro trends we've been talking about. Their algorithm doesn't know the difference between Bayville and a premium waterfront spot in Silverton. It just doesn't.
So I'll just leave you with this one question. The average appreciation in Tom's River was 4.8%. We've seen that some neighborhoods did even better. So the only question that really matters now is, do you know your number? What was the actual number for your home on your specific street? Because knowing that answer, well, that's everything. That's the key to understanding where you really stand.